Okay. Got a question about when daylight savings starts. It starts in Australia on the first Sunday of October. That's generally when daylight savings starts. I was checking this on the weekend actually to know when the US comes off. So we start daylight savings on the first weekend of October, which is happens to be the long weekend. The UK come off daylight savings on the 28th of October. Um, is it the 28th of October? So we go on the 5th. They come off. The UK comes off on the 26th of October, and the US come off on the 9th. So on the 5th of October, we go on daylight savings. So the end of day will be then at 8 a.m. Instead of the current 7 a.m. However, when the US come off daylight savings, it'll then shift another hour to 9 a.m. So I can prove that by going time and date. So what you're looking at is, so we go on the 6th of October, but time zone converter as of, what did I say, the 9th of, let's go the 11th of November, 5 p.m. New York, US, USA, 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 New York, 5 p.m. New York. What time is that in Australia? As you can see, that'll be 9 a.m. So after they come off, it'll be 9 a.m. But during October, most of the month of October, so we'll go mid-October. After we go on daylight savings, it'll be 8 a.m. Yeah, and it'll be 8 a.m. Okay, after we come off daylight savings. So that should answer that one. Okay. Looking at the pound CAD. Oh, actually, before we go to the pound CAD, dollar CAD. Someone sent me a dollar CAD late in the day. I'll just open that up. But before we do that, someone's asked another question. Dollar yen, your report this morning. Could you show how you got the fib 61.8 resistance on the dollar yen? Yep, sure. Dollar yen, we can see the 61.8 resistance here of 105.57. There's also this trend line. And the last touch of that trend line is where I've drawn that fib. So that trend line is 2 touches. We're on that now. That's also this large move that I drew, the fib. And so that's the '07 highs. I think I wrote that in the report, didn't I? To the 2011 lows. And we can see that the market's been reacting to it. The 50 was resistance and the 38 was support, having been resistance to start with. And then it's just been the 618 is the new resistance, so that's where that came from. And that trend line has just broken it for the time being. But that 105.50 area is should be big resistance, and we're hugely overdone here. So 91 to 88. I can't see the US dollar getting any weaker anytime soon, but it is certainly overbought or oversold on a lot of pairs. So this person's dollar CAD was just coming. I set this up and left it deliberately, and it triggered yesterday. So far, a good trade. Here is the setup and checklist. Okay, you've got, don't know what this trend line is. My trend line's a bit lower than that. Mine, as you can see from the weekly, 1, 2, 3 touches, 4 touches. Yours might be, I'm not sure, coming in where. But you've suggested that higher highs and higher lows, yeah. It's an interesting fib you've got there. I'm not sure I would have drawn that fib. Unless it's the move away from the 50, but it's obviously broken below the 50 here. So, but just there is a strong engulfing bullish bar, and you've taken that. Your RSI is at 38. You've given this, well, 8 points above the 50 and the 200. Well, you're not. You've given that a point and you're not. Finding support off the moving average, yeah. Horizontal support, yep. RSI convergence, yes. Bullish price action, yes. Resistance in the way, I would say yes. And you've done the same, that's good. Fib retracement, trendline support. You haven't given a point to good. Hidden divergence, right. That's all good. And obviously the US dollar's strength overnight has got you performing well. Why is yours? Wait on. What moving averages do you have? What's this? Oh, okay, I'm looking at the green one. I thought that was your 50. Okay, yeah, you are above the blue is the 200, the red is the 50. Okay, I'm not sure what this green one is. It must be the 20. So I don't know why you've drawn your fib from there. That would be the next question. I mean, personally, I would have gone from here, or worst case scenario, this low here, depending on what you're cycling along. But I would have thought that that'd be the obvious one there. Other than that, that's all good. Remember, you've got the BOC out tonight, so that might provide a bit of volatility. And on the back of that, I would probably suggest to move your stop underneath this bar, or maybe just leave it where it is. But um, yeah, you got to manage this trade with the BOC tonight. I'm not sure they're not certainly not going to raise or they're not going to move rates, but it's what Woosley, sorry, the Polos is his name. What he says in the conference or in the media press release statement that could cause some volatility. So you need to be careful of that. And that brings us to this other one, the pound CAD. Pound very much surprised me. I wasn't expecting this. The bloody Scots ruining the party for everyone. And by the looks of it, there's still some selling to come. Can't see a whole lot of it because it's overdone in all time frames. Weekly, even the monthly, I think is overdone. Some movement to come on the monthly, but the weekly's overdone. The daily's overdone. The 4 hours well overdone. 1 hour is hugely overdone. But this, with the US dollar strength and the Scottish election, only 2 weeks away. There probably is some further downside to come in this. So the pound CAD, the concern here is obviously the news, which you've highlighted. You said that there's some news coming out tonight, so you're waiting. The other concern is that obviously this horizontal support line, which is here, it's not that strong. I mean, if we look at them, mine doesn't go back monthly. You might want to look back in history and see if its price has reacted to it in other areas. I would put it as strong, but not if it's reacted and turned back in history a couple of times as well, then that would increase its strength. So there is some room to come on the downside in this. You've got the BOC tonight, and you've got the Bank of England tomorrow night. So there's some major data coming out of this. Looking at your setup, you're targeting the 1.618, which is okay. I don't know what the risk reward on that is. You mentioned 1-to-1 effectively. Risk reward 104. Yeah, because you're targeting the 78-71 area, which is probably a reasonable concept, but if it does get through this, it could continue down. Personally, I think the pound, outside of obviously the Scottish issue, the pound is still doing okay. Economically, they're fine. Okay, manufacturing was a little weaker on Monday. What did that come in at? 52 when it was expected 55, but 52 is still in growth. And so I think that's a good thing. And then the current, the construction PMI came in last night at 64, well above what they expected at 61. So yeah, I think the Scots literally are ruining the party, unfortunately. So this setup, I can't really fault what you're looking at. You've done this Fibonacci, and it's come back to what looks to be only the 382. Plus, it's not really cycling. This support line you've got, I don't think is all that much. This one here, we've got these 1, 2, 3 kind of lows. I think that's a bit of a stronger area, if that makes sense. And then you've obviously got this one here. So yeah, I think it's best to probably leave this one at this stage. Probably regret saying that, but yeah. Pound Aussie, there was a question on how to manage a trade that was taken, a phase 2 trade that was taken. There's a bit of a support here again. I don't. How strong that is, it's only really one turning point. I'm not sure if it's all that strong. The question was, should I move my stop underneath this? I would suggest yes, that there's increased weakness coming in the pound, and that potentially would save you half your risk, because you're looking at something like a 90 or 100 pip stop, somewhere around there, and you're now looking at, say, a 50 or 60 pip stop, so it's effectively halving your risk. We can see that there's plenty more to come on the downside, and there's a higher probability of this momentum continuing with the weakness in the cable, and the Aussie's just fart-arsing about, really doing nothing, which is just downright annoying. So yes, I would be getting into protection and moving my stop underneath that. Are you online? Yeah. I'll just reply to him. And I would be doing that even more so if your account was in the negative. Okay. That one we've looked at. So, Euro Swiss and the Kiwi Swiss. This person is looking at basically selling the Swiss by buying the Euro Swiss and buying the Kiwi Swiss. There's a low correlation on them, so it's not as if one fails, they'll both fail. So it should be if one trade goes according to plan, then the other one should too. This one, you're trading with the trend, which is good. This one you're trading against the momentum, which is obviously a lot riskier. But this one has that massive support at $1.20 that we all know about. Using ATR trade management, you have the divergence there. You've got Fibonacci support 2063. That level there. Don't know how strong that is. I wouldn't necessarily call that a strong level. The strength is obviously at 120, which is 60 pips away. If you're prepared to run that, then that's going to ruin your risk reward. So, where's your stop? Initial 2057, so just underneath that. Using an ATR stop, okay, gives you a risk reward of 1 to 3, is it? Okay. Risking 33 pips, taking 44. 1.3. Not fabulous, even with an ATR. Okay. You think you've identified 2060 as a strong support? I think it's at 20. But look, this I like this trade purely because of that support at 120 fundamentally. And you know the euro pound's got tanked. The Kiwis tanking. The yen is tanking. The CAD is tanking. The euro and Aussie are doing not much. You know, when everything else is getting pummeled. The euro has been pummeled, but it's hanging in there as people sit on the fence, waiting for the ECB tomorrow night. And Draghi is expected to do something, but I don't think he'll do enough. So this is a potential. You know, obviously you would have traded yesterday, as you sent this to me yesterday, and I'd be looking at these levels here as a potential target, if not, you know, running it even further. But that's where my initial target would be looking at. Which is underneath yours. Sorry, above yours. Yours is underneath mine. Okay. Did you get into that, mate? And the Kiwi Swiss, you wouldn't have, you might have got into. Yeah, I mean, if it's you're using the 200 as a cyclicity, what are you using as a cyclicity? Kiwi Swiss did not trigger. Okay. The euro and your euro you got into. Okay. There is clear divergence. Your momentum is ticking pretty high already, which means this would be a long, slow struggle to get up here. Let's come back to the 786 on this cyclicity of this channel. It makes sense. I mean, probably back to that channel now, isn't it? It's not quite. Yeah. I mean, I like the concept. And it's obviously the Kiwi got a bit hammered last night. So lucky that didn't trigger in, hey? But that's a good trade setup, and sometimes they don't trigger in, which can be a blessing in disguise. My only thing on that one would have probably been the momentum. Okay. Sing Yen. Trying to get a phase 2 going. Waiting for a ring high. Yeah. With the yen's weakness, we're still waiting on a lot of things. A lot of yen crosses. Again, I don't have a strong horizontal up here, but the yen does, as we've pointed out before, the yen does have a pretty strong horizontal up here. Even in the, it's gone through that one. Yeah, it's really only this Fibonacci, I suppose. But the yen has that resistance coming up. The Sing Yen I can't see if it does, so I'll have to believe that your 83.50 is strong. It's now between the 1.272. You got the 1.618 coming up. It's gone past that, and I dare say it's gone past this trend line. Yeah, certainly in the extension zone and momentum's there. Obviously, we just need to see some selling. And certainly the risk reward would be there in terms of bringing it back to the moving average or even this support line. Okay. Another person looking at the Euro Swiss here. This big thick red line, $1.20. Yep. 2.618. This red line, which is 2060 effectively. Three pips below the bottom of the move down, 4 pips above the ring low formation by supporters, also 2618. Okay, 2.618, stop loss is 30 pips, take profit is 31. That I'm not all that keen on. What else you got on here? Euro Swiss. Yeah, I'd be looking at these lows here, which is around the 618 retracement and the 50 EMA and these lows. That's where I'd be targeting, and that might get you a better risk-reward ratio. Well, it will get you a better risk-reward ratio by how much? Well, it'll add another sort of 15 pips to your trade. So you're looking at 46, 30, so at least sort of 15 pips is about 1.5. Yeah. But you've got everything there that that you need for the trade, as you can. Yep, they're all green, and you should be into the trade now because it did go through yesterday. And looking, yeah, that's a test bar. You could potentially move your stop if you wanted to, but yeah, this is where I'd be targeting this area here. Touches a fade true. Prefer to go long than short on this pair. Yep. After a low test bar, I see a ring low at keys, but which is also, yep. We'll trail a stop looking to monitor it closely at the 50 fib, which should meet up with the 50 EMA in a few days. Fair call. I would have just been sort of targeting it maybe a little bit higher at the 61.8 fib. Okay. Okay, Aussie Kiwi. This is all I've got on now at the moment after being taken out of that friggin' bar. This phase, phase 2, this Fibonacci is off this move here. The 50 of it was very strong resistance. It's broken through that, and potentially, that's where I'd be having a target. But I've got it at the moment at the 200 and see what happens when it gets to the 50. Triggered in, and they're looking at sort of, well, bullish inside bar at the moment, because the Aussie's doing nothing and the Kiwi's still falling. I do expect the Aussie to catch up with its counterparts, but at this stage it's still stuck in that range. So here we are sitting, we've got the stop. Anyway, let's have a look at your analysis. Dollar CAD we've covered. Yeah, 112 resistance. Stop loss 1206. Take profit 1030. Next support level there. And the 50. Is it? One. Okay. Continue trailing when price hits my target. 76 stop. 100 pip profit. 1.3. Divergence there. And that's the 2. Yeah. Was the 2. Tag the 2 nicely. Just inside that. Okay. Look, your target is where I'm expecting the market to probably stop. On this 50 around 101.35, 101.40 area. I'll monitor that and maybe exit the trade, but at this stage I'm still targeting the 50. Gives me a better risk reward, but we'll certainly monitor it when it gets down here. Okay. test. All right, and that is the emails, guys. That's pretty much it for today. Obviously, there's a big week this week with central bankers. If we I'll put employment in as well because Friday night. But this is this week. Tomorrow, big. I've got Numbnut talking today, but big week of central banks. Well, day tomorrow with BOJ, BOE, ECB, and then on Friday night we've got the Canadian and US unemployment. The US being the bigger one because that will. Everybody's looking at that for Yellen to be raising rates, which is why the US dollar is rallying so strongly. Okay, so big day tomorrow. Be aware of that. Manage your trades. There's not much else I'm looking at. That's too far gone. That's in the middle of the trend. That just nailed me last night, the bastards. This one, maybe there's a phase 2 trade coming on, but I'm not going to be trading phase 2 till I get my account back in order. And there's very little phase 1 trades coming up. This one, Aussie, is just dead set boring, so I don't see much happening. With Stevens talking the Aussie dollar down, do you think it'll gain traction? Oh, look, he's been talking the Aussie dollar down for the last 2 years, and for the last 6 months, especially, and it's still going sideways. So he started talking the Aussie down. I'm not sure. I can't remember if he was talking down here, but he was still certainly talking it down over here. I do remember that clearly last year. As he was lowering rates, he was kind of saying that's because of the Aussies' height. CAD Sing, Monday entry looked good, but we'll wait. But wait on a seller day. Had that still okay to enter. I'd be looking to go place your order because quite literally your entry was around here, underneath this bar here. You would have been looking at this bar. This bar didn't give it to you, then got the selling, and you go okay. So that's 1458. Let's call it 1455. It's trading at 1460, so it's 15 pips below. Or the market's 15 pips above your entry, so you can be placing a sell stop there now. And if it gets triggered in this current bar, then yeah, that's okay. So this one is one that I would have been, if you've done all your analysis and you're wanting to trade this back here, then it still stands, and you can be placing your trade for today. I haven't seen your analysis, but that looks, and my history doesn't go back all that far on this. Selling the CAD. Well, I'm bullish CAD, but everybody else is bearish, so you can't fight the market. Kiwi dollar, interesting article on Bloomberg on suspected intervention by the Kiwi Central Bank already. In your experience, do they spread their effort over time if they are intervening? They certainly don't jump in and push it all in one day. They do, they are strategic about it. I really don't think the central bank would be in New Zealand. They don't have the money necessarily to do it. And Wheeler has been on record as saying he thinks it's a waste of time. So I'd be surprised if they are officially they don't, unless they announce it, they don't really talk about it. The RBA has been known to support it, and it comes out in their balance of payments. Just like any company, they have to report their positions to someone, and it's at that point in time you realise that they were intervening, but it's well after the fact. So unless they actually make the announcement that they are intervening, and they don't, if they do make that announcement, then the market generally does all the work for them, and they don't have to do much. But Wheeler hasn't, as far as I'm aware, come out and said that he is intervening. In fact, I do remember him about 2 years ago saying that he thinks it's a pointless concept as far as New Zealand's aware, or as far as New Zealand's concerned. You've emailed me the article, okay. Yeah, this is what I was talking about, being in a war with a pea shooter. So they're not going to do it. I wouldn't have thought. It's like Glenn Stevens, talking about, saying that it's that they don't like the currency high they're going to intervene. Well, not necessarily. It takes a fair bit of money to try and push the currency around, and that's a pretty big risk for a Reserve Bank to take on when they've got a small sort of amount of funds to play with. If it doesn't work, then they end up losing money. So I think the negativity on the Kiwi was not necessarily based on the central bank intervention, but that it was overpriced. Pound yen. What about the pound yen? There's no trade there that I can see in the pound yen. Nothing that, if you're trading it as a range, maybe. But there's no divergence. Momentum's not overdone yet. There's still some upside left. So you're not selling at the extremities. I wouldn't necessarily look to buy it at this stage, unless you're going down to something like this, the hourly, and then that's more trading the yen really. On the hourly I might look at it, but on the daily there's nothing there for me on the daily. You're sort of in the middle of it. You certainly could potentially participate on the daily. I'm sorry, on the hourly. Peter, done the dollar CAD, did that first up. Did your email first up too? Okay. Is there anything else? No? Okay. Alright guys, be careful with tomorrow's data, and I shall speak to you Friday morning. Thanks guys.